Well, our next guest says that her trader's gut is tingling as markets bump against new highs. Diana Avigdor, Vice President, Portfolio Manager, and Head of Trading at Barometer Capital Management, joins us now from the TSX with more. Diana, I have to ask you, what does all of that mean? How do you feel about the market?
So, it is a little nerve-wracking that indices are making new highs, but it just kind of feels sleepy. It's range-bound. It's always hardest to keep on holding on to your winners, and the hardest trade is to sell your losers and to hold on to your winners, because while the trader sense feels like it could perhaps stop rallying here, nothing fundamentally or internally technically is proving that should be the case. So this is when you have to hold on to your nerves and hold on to your stocks.
Diana, how do you look at tomorrow, though? And I have to ask you that in the sense that I think a lot of people are trying to figure out, are there global growth concerns? That's kind of what the market's telling you today, particularly when you're hearing that a lot of central bankers might be adding stimulus into the marketplace, yet nobody really got that excited about it. Most of the major markets were down on the day.
Right. I think that the volumes are light, and there is a little bit of people are trying to see whether this is a sell and may go away situation. The Goldilocks situation for our market right now is to have steady, decent, slow growth, not runaway growth that would create inflation, and not negative numbers that would imply that we're going back to some kind of...
Diana,
yes.
I'm sorry, let me just interrupt for 1 second. I do want to bring some breaking news. We are hearing from Cisco. There is a beat on the bottom line, 51 cents versus 48 cents. The stock is trading higher in the after hours, up 2.3%. Michael Hainsworth is joining us with more. Michael.
All right, Catherine, I'm now seeing it down after hours by about 0.5%. So that initial first blush reaction of a 4% increase on the stock after hours after beating on the bottom line, it seems to be erased here. I'm looking at 51 cents per share when we were expecting only 48 cents per share out of the company. Revenue line coming in better than expected as well. We were looking for 11.3 billion, 11.5 billion is what they gave us. It's also better than what they gave us February 12th when they said best case scenario 11.4. The company's third quarter adjusted gross margins came in stronger than anticipated as well. We were only looking for 61.3%, 62.7% is what the company gave us this time around. So I'm trying to dig into some of the details, Catherine, to get a sense as to why the stock has suddenly erased a near 4% after hours gain after falling in the regular session by a nickel to $22.81 per share. Again, company beat on the top line. It beat on the bottom line, as you see there, at 51 cents versus the estimate of 48. So revenue beat, EPS beat. The guidance came in a little lighter than expected as far as what this current quarter would give us. So overall, things are looking good. I'll dig into the details. I'll be back in about 5 minutes with more.
All right, let's turn it back to Diana. Diana, as you walk into the trading floor tomorrow and also as a portfolio manager, what are you going to be thinking?
Well, we're watching for the CPI numbers tomorrow, which are going to be important. But, overall, I'm coming back to that question about growth. And I just want to highlight the fact that for the first time in a long time, we're not seeing a rotation going in between asset classes. You see the bond markets acting okay and the equity markets acting okay. And why should that happen when all we've been talking about was this money rotation? I think that this slow growth, steady, 2 steps forward, 1 step back is beneficial for the market. And I think that after a period of pause and rotation, which is what we've been seeing, but not too much cash, and the fact that people have raised some cash in March and April, but that the pain trade is clearly higher as we're not selling off, and beta is being held at support levels right now, and coming back up a little bit. And earnings season was pretty good.
Diana, when you look, though, at the sectors, and we've seen significant, take the bond market out of this in terms of the rotation out of equities into bonds, if that's in part what was going on today. But when you just take a look at equities and the very significant, strong, volatile, violent sector rotation, are we done there yet? And what do you think are the sectors that you want to be positioned in right now?
A month ago, you and I were talking about the IBB, which is the biotech ETF, and we were talking about how it sold off after a big rally, and we were talking about how it was not outside its regular temperament, and now it's reached its natural support level, and it's kind of held in there for the past couple of weeks. These sectors, and we discussed it, was that a good time to maybe invest? And we felt comfortable that it was okay because it was not outside the realm of its normal temperament level. The same with selected technology, or industrials, or energy. We have financials reporting next week in Canada. We have the financials in the U.S. After some volatility also are holding in at support levels. So we'll see how the Canadian financials come in. Wealth management has been great. RSP season has been very, very good.
Right.
So we're looking for some earnings support there.
All right.
So that would support the Canadian market with 30% weight in the TSX.
We will watch for that. Diana, great to have you on the program. Thanks so much for joining us today.
Thank you.
That was Diana Avigdor, the Vice President, Portfolio Manager and Head of Trading at Barometer Capital Management, and she did join us from the TSX.